In Tesla, we had a fascinating conversation last night with ARK Invest's futurist, who was pointing that, like many people, the value in Tesla is really around Robotaxi, and that the hardware and the auto company is something that's not really where you should be looking. I at least agree with the auto part being overvalued. Waymo is something that I think is also not given any valuation credit, at least underrepresented if you think how much Tesla gets from robotaxis.
Tesla has always been known for pushing boundaries, but right now it's facing one of its toughest financial challenges yet. After reporting a staggering 71% drop in profits in the first quarter of 2025, questions are swirling about the company's future. For the first time in a long time, Tesla isn't just competing with rivals, it's fighting to stay ahead of its own reputation. Enter the robotaxi revolution. In a bold pivot, Tesla is betting big on its new autonomous ride-hailing platform, centered around the recently unveiled Cybercab. Elon Musk believes that self-driving cars aren't just the next step, they're the key to reversing Tesla's profit slide and securing its place at the top of the EV industry. But it's a risky gamble. While the idea of a driverless future sounds exciting, the road to full autonomy is filled with technical hurdles, regulatory challenges, and fierce competition. And with Tesla already under pressure from investors and critics, there's little room for error. In this video, we're breaking down the details of Tesla's robotaxi strategy, what the Cybercab brings to the table, how the market has reacted, and whether this bold new move can truly turn things around. Stick with us, because Tesla's next chapter might be its most important one yet. When Tesla revealed the Cybercab, it wasn't just showing off a new car, it was unveiling a whole new vision for transportation. The Cybercab is designed as a fully autonomous two-passenger vehicle with no steering wheel, no pedals, and a futuristic minimalistic interior. It's meant to operate completely without human intervention, representing Tesla's most ambitious step into the robotaxi market. What immediately caught attention was the Cybercab's price. Musk announced it would cost under $30,000, aiming to make autonomous ride-hailing affordable and widely accessible. That's significantly cheaper than the average new car sold today, setting Tesla up to undercut both traditional taxi services and emerging autonomous ride networks. The Cybercab also features inductive charging technology, allowing the vehicle to recharge wirelessly without needing a human to plug it in. This upgrade could solve one of the biggest hurdles in scaling autonomous fleets, keeping them powered without constant human involvement. Stylistically, the Cybercab embraces Tesla's signature sleekness, but in a compact, hyper-modern frame. Critics noted the absence of traditional controls might raise safety concerns, especially among regulators. However, Musk doubled down, emphasizing that Tesla's full self-driving FSD technology would be ready to safely manage the Cybercab without manual overrides. The goal is simple: put millions of Cybercabs on the road operating 24/7, generating revenue without a driver's salary to pay. Musk projects that Tesla owners could eventually opt into a shared fleet program where their personal Cybercabs earn income while not in use. A revolutionary idea if it works at scale. Still, big promises come with big expectations. Some investors worry about Tesla's aggressive timeline and whether the technology is truly ready for wide-scale deployment. For now, the Cybercab stands as Tesla's boldest answer to a shrinking profit margin and increasing market competition. Before we dive into how the market and investors are reacting to Tesla's robotaxi push, I'd love to ask for your support. If you enjoy this kind of deep dive content, make sure to like this video and subscribe to the channel. It really helps us grow and bring you even more breaking news and insights. Thanks for being here. Tesla's Cybercab announcement generated a lot of buzz, but not all of it was positive. Investors initially hoped the unveiling would deliver clear timelines, concrete deployment plans, and fully demonstrated capabilities. Instead, the event left many with more questions than answers, triggering a notable 9% drop in Tesla's stock price within days. One of the biggest concerns among investors is the timeline uncertainty. Musk has promised fully autonomous vehicles several times before, but past targets have repeatedly slipped. Without firm guarantees on when the Cybercab will actually hit the streets, investors are cautious about treating the announcement as a near-term catalyst. Another issue is the capital investment required. Building out a robotaxi network, manufacturing new vehicle models at scale, and installing infrastructure like inductive chargers could cost Tesla billions. Some analysts Analysts fear that while Tesla talks about reducing vehicle prices, the upfront costs of scaling the Robotaxi program could weigh heavily on already shrinking margins. Moreover, there's skepticism about regulatory hurdles. Self-driving technology remains a highly scrutinized field, and no major market has yet approved fully driverless operations without strict conditions. Tesla's assumption that regulatory approval will keep pace with technology is viewed by many investors as overly optimistic. Still, not everyone is worried. Some see Tesla's move as a bold, necessary risk. By focusing on autonomy instead of chasing volume car sales, Tesla is positioning itself for a future where vehicle ownership declines and mobility services dominate. If successful, the Robotaxi fleet could unlock a massive new revenue stream that fundamentally reshapes Tesla's business model. Short-term volatility aside, Tesla's long-term investors tend to stay loyal during ambitious pivots. But this time, they're watching closely. The company will need to show real progress, working prototypes, regulatory approvals, and financial roadmaps to rebuild confidence and justify the Robotaxi dream. Until then, excitement about the Cybercab is tempered by a heavy dose of reality. Tesla's Robotaxi plan doesn't exist in isolation. It's part of a major pivot in the company's overall strategy. In a move that surprised many, Tesla confirmed it would delay the launch of its much-anticipated affordable mass-market EV, shifting focus and resources toward accelerating the Robotaxi rollout. Originally, Tesla had promised to release a new low-cost electric car aimed at broadening its customer base. That car, expected to cost around $25,000, was seen as crucial for competing with emerging rivals from China and Europe. But now, executives have decided the future lies elsewhere, in fully autonomous, revenue-generating fleets. Elon Musk argues that a successful Robotaxi network could make traditional car ownership less attractive, especially in urban areas. If Tesla can dominate the ride-hailing market with autonomous vehicles, it might not need to sell as many cars to individual buyers at all. In theory, fewer cars producing more value would make the company even more profitable. Critics, however, see big risks in this shift. By postponing the affordable EV, Tesla leaves open space for competitors like BYD, Hyundai, and Volkswagen to seize market share in the mid-range EV segment. And if the Robotaxi project faces delays, or worse, fails to achieve widespread adoption, the company could find itself squeezed from both sides, losing mass-market buyers while lacking a replacement revenue stream. There's also the branding question. Tesla built its name on innovation and accessibility. Pulling back from offering a widely affordable EV could harm its image, especially among younger and first-time buyers who have long dreamed of owning a Tesla. Internally, sources say the company is reorganizing its teams around autonomy and software development, moving talent away from traditional vehicle projects. That's a major bet, and one that will require flawless execution to succeed. In short, Tesla isn't just introducing a new product, it's rewriting its roadmap entirely. Whether that gamble pays off remains one of the biggest open questions in the auto industry today. Tesla might be the most high-profile name in the autonomous vehicle race, but it's not the only player. As it pivots aggressively toward robotaxis, Tesla faces competition from companies that have been working on full self-driving solutions for years, many of them with different strategies. Waymo, owned by Alphabet, Google's parent company, has arguably the most established autonomous vehicle service. Operating driverless taxis in select US cities like Phoenix and San Francisco, Waymo uses a different approach: LiDAR and mapped environments instead of Tesla's vision-only system. This allows Waymo to achieve highly reliable service in limited areas, though it hasn't yet scaled nationally. Meanwhile, Cruise, backed by General Motors, has also deployed robotaxis in several urban centers. Cruise follows a slow, careful rollout model, securing permits and working closely with local governments to expand its footprint. Unlike Tesla's more aggressive style, Cruise favors incremental growth over sweeping promises. Internationally, companies like Baidu's Apollo project in China are racing to build autonomous fleets. These competitors benefit from different regulatory environments that sometimes fast-track experimental programs compared to the slower, more cautious approval processes in North America and Europe. Tesla's strategy sets it apart. Rather than starting small and controlled areas, it aims to launch a mass-market autonomous service from day one. While bold, this introduces enormous risk because regulatory agencies and public trust will be much harder to win without proven incremental successes. Another challenge is technology perception. Waymo and Cruise heavily market their safety records in testing. Hours. While Tesla faces criticism that its beta testing approach exposes real-world drivers and pedestrians to unnecessary risk. In an industry where one accident can set back public acceptance by years, perception matters as much as performance. For Tesla to dominate this emerging sector, it won't just need superior technology, it must also earn regulatory approval, maintain public confidence, and compete against companies playing a very different, often safer-looking game. The robotaxi wars are heating up, and Tesla's not guaranteed a victory lap. For Tesla's robotaxi dream to become reality, clearing technical hurdles is only half the battle. The bigger threat might come from regulators, lawmakers, and public scrutiny, all of whom will have a say in whether autonomous ride-hailing services are allowed to operate widely. Right now, fully driverless operations are approved in only a handful of areas globally, and even those approvals come with strict limits. Governments are cautious about granting blanket permission for vehicles without human control, especially after high-profile accidents involving experimental self-driving systems from various companies. Tesla's decision to remove steering wheels and pedals in the Cybercab adds another layer of complexity. Regulatory frameworks in most countries still assume vehicles must have a manual override option. Changing these laws or gaining exemptions could take years, particularly in highly regulated markets like Europe and parts of the United States. Technology readiness is another looming question. Tesla's full self-driving FSD software has made progress, but critics argue it remains unproven for full autonomy. Incidents involving Tesla vehicles on autopilot have already drawn the attention of safety boards and consumer protection agencies. Launching a widespread driverless fleet without proving the system's robustness could invite backlash and stricter oversight. Public perception could also slow things down. Surveys consistently show that a majority of people remain skeptical or fearful of autonomous vehicles. News of a single crash involving a cybercab could create massive negative publicity, setting back Tesla's rollout and potentially influencing lawmakers to tighten restrictions. Lastly, insurance and liability questions remain unresolved. Who is responsible if a robotaxi gets into an accident? Tesla would likely carry much of the legal burden, introducing new financial risks that traditional car sales do not. In short, technological innovation alone won't be enough. Tesla must navigate a maze of legal, political, and societal challenges. Now we want to hear from you. Do you think Tesla's robotaxi strategy will be the breakthrough the company needs, or is it setting itself up for a bigger fall? Drop your thoughts in the comments. We'd love to hear your take. If you enjoyed this breakdown, hit that like button and subscribe for more updates on Tesla, tech, and the biggest moves in business. Thanks for tuning in.